Yes, 1, 2.
Yes, let's go.
Hello, everybody.
Hello.
Hi, everybody. Welcome to C-Suite. I'm Diane Gubin, co-CEO of C-Suite, along with...
Hi, everybody. Happy Easter, happy Passover, all your spring holidays. Welcome.
Yes, and today we are just so happy. We're going to jump into our Executive Edge CEO series. And today we are just so blessed and honored to have Qiana Charles with us. Qiana is the Vice President and Regional Executive of the Federal Reserve Bank of San Francisco and the Los Angeles branch. And Qiana is going to tell us a little bit about the work that she does and about the Federal Reserve System, which most certainly isn't out there a lot today, right?
Yeah.
Qiana, we can't wait for you to tell us everything. So with that, I'm going to turn it over to you, and maybe you can tell us a little bit more about your background and go from there.
Okay, well, give me 1 second. I'm going to share my screen as well. Well, good afternoon, everyone. Again, my name is Qiana Charles, Regional Executive and Vice President with the San Francisco Federal Reserve Bank. Before we get started with the series, I just want to acknowledge a couple of folks who are listening in. Number one, I just saw Carolyn Cooksey Sims join us, and I wanted to acknowledge her and say thank you for connecting me with C-Suite. It was a couple of years ago, and it's been such a great experience working with this organization, learning a lot about how businesses and industries are pivoting and adjusting to kind of where we are with current economic conditions. And then lastly, I absolutely want to thank and recognize Diane and Beth for your leadership of C-Suite, but also everything that you do to help the Federal Reserve Bank of San Francisco connect with your members, again, to listen and to learn about how various industries have been impacted by the economy. We've had many engagements over the last couple of years, and I'm really, really excited to present really how the Federal Reserve works for you. So with that, we will begin the presentation. Let's see, I know a couple of leaders are still joining us.
Yeah, I'll go ahead and let people in as they come in, Qiana.
Okay.
Just so you know.
Okay, sounds good. So just a little bit about me. Again, Regional Executive with the San Francisco Federal Reserve Bank. I'm actually in our Los Angeles branch, which is the largest branch in the system. For me, my primary role is to help the bank, the Federal Reserve Bank, make connections with business leaders and industries across the region that I cover so that we can listen and learn about the impacts of monetary policy, also the impacts of fiscal policy, and how all of those things have impacted businesses and how you are thinking about your industries differently. So the area that I cover includes really Central Valley, all the way down to San Diego. I have responsibility for Arizona and Southern Nevada, which is primarily Las Vegas. And I know that a lot of the women on the call today, I saw that you're from Vegas. There's a couple people from Phoenix and other places. So really excited to chat with you today. Just a little bit more about me. I've been in this role for a little over 3 years. I made a transition during the pandemic. I have a utility background as well. I worked for that industry for over a decade. I also have a policy and a legislative background, and many, many moons ago had an opportunity to move to Sacramento and work for the California legislature and really learn how politics, policies, parliamentary procedures, how all of those things kind of impact the state of California. And then formally, Jesse and Umra Assembly Fellow, as well as a current board member for Leadership California. Before I begin my presentation, I do want to say that I am not an economist, and the views and the information that I will share with you today are not expressly those of the San Francisco Federal Reserve Bank, or the Federal Reserve System, and we're going to talk a little bit about those too. But I wanted to make sure that you all know I'm not an economist. And so there may be questions that you have at the end of the presentation that I might not be able to answer. And I hope that's okay. I will work very hard to get those answers and get them back to Diane and Beth as well. But I also will say that I am also not able to opine on where I think interest rates will go. There is a FOMC, a Federal Open Market Committee, a meeting coming up next month. And so much of what I will do is try to lift up stories and information about, again, how industries and businesses are impacted. So with that, we'll move into the structure. So I thought it would be helpful to start somewhat at the beginning and talk at a very high level about the Federal Reserve System itself and how we're structured and how we're organized. We are the central bank, of the United States. And our goal and the system works to really foster a stable and an efficient monetary, financial, and payment system. So I'll wait till all of this information kind of pops up here. I thought it would be helpful to share that the federal government had many iterations, I would say, of a central bank. But what's most important is that the Federal Reserve Act was established in 1913 under President Woodrow Wilson. And then lastly, the Federal Reserve regional banks were created and established in 1914. So when the Federal Reserve Act of 1913 was approved, the central bank was really designed to be a federated system, but also a local system as well. And you'll hear me talk a lot about the Federal Reserve Bank of San Francisco because that's where probably 85% of the folks on this call, that's where we live, work, and play. But I thought it would be also helpful to understand that the country is really broken up into 12 distinct and geographic regions. Starting number one with the Boston Fed in New York, and then goes all the way out to the West Coast with the 12th district being headquartered in San Francisco. And so you can probably imagine in 1913, the population of the United States at the time was really shifted to the East Coast. And so that's why you see a lot of the reserve banks are kind of bunched together, if you will. You got 1, 2, 3, 4, 5. They're very close together. That's because that's where the populations were centered in 1913. And then as you go further west, you'll see that some of the other districts, like the Kansas City, Dallas, and of course, San Francisco, they have larger territories and more states to cover. And we'll talk a little bit about that as well. So when the Federal Reserve System was established, and you might hear me say system a lot, I wanted to just talk a little bit about what I mean by the Federal Reserve System or the Central Bank of the United States. There are really 3 pillars that actually make up the Federal Reserve System itself. There are the Federal Reserve Board of Governors. They reside in Washington, D.C. Those are Board of Governors that are appointed by the President and confirmed by the United States Senate. They can serve a 12-year term. And our chairman, current chairman, is Chairman Jay Powell. And then again, you have the 12 reserve banks, and I've already talked about how the country is kind of broken up into these 12 geographic regions. And then lastly, we have the Federal Open Market Committee, and I mentioned this earlier, the FOMC. So the Federal Open Market Committee is a combination of the Reserve Board of Governors and then the presidents of all of the 12 reserve banks. That body, the Federal Open Market Committee, meets about 7 or 8 times a year. It's usually a day and a half or 2-day meeting. And then the Chairman Powell, will do a press conference, and you may have seen this back in March, and he'll come out in the press conference and he will say the Federal Open Market Committee is met, and we have looked at the data, and the committee has decided to do X with rates. Okay. The last time they met was in March, and they decided to keep rates steady. based on the information that was available and the information that they typically look at. So the Federal Reserve Board of Governors, as well as the 12 reserve banks, we actually all have a dual mandate. It is maximum employment and price stability. So I'll talk a little bit about the price stability side because it's probably what we're most known for. And it simply means that the dollar that's in your wallet or in the bank, that it holds its current value. And on the maximum employment side, we say that anyone who wants a job has access to a job. Now, notice that we don't say 100% employment. There's no such thing because there are people who are always in transition. Whether you get ready to leave a job or you've left a job, you might be in transition into a job. So it's never 100% employment, but it's maximum employment. So as I said, I wanted to talk more about the San Francisco Federal Reserve Bank because the majority of the folks on this call, we all live, work, and play in the 12th District. And I want to highlight for you a little bit about our mission, which is to advance the nation's, again, monetary, fiscal, and payment system to build a stronger economy that works for all Americans. That's our mission. And our goal really is to build an economy that works for all of us. So the Federal Reserve Bank of San Francisco consists of the 9 most western states, including Hawaii and Alaska, and territories like Guam. We also have 80% of the country's federally recognized tribes within our district. No surprise to you, we are the largest of the 12 districts. We have 6 locations. Again, I'm here in our Los Angeles branch, and we have cash operations or processing centers kind of strategically located within those 6 locations. There are 69 million people who live, work, and play in the 12th district. It's a very, very large population size. In fact, our district makes up 21% of the U.S. population, 37% of the geographic area of the United States is covered in the San Francisco Feds District, and 23% of the country's GDP originates here in the 12th District. 20% of all ag is produced here in the 12th District. So specifically, what do we do? As a reserve system and as a bank, we really have 3 pillars. One is to support monetary policy. That includes, of course, the Federal Open Market Committee. I mentioned this is the body that meets and votes on where the federal funds rates will be. Those federal funds rates then actually will impact business loans, automobile loans, home loans, and all things that you would do if you think about borrowing money. A lot of it is based on the Federal Open Market Committee's actions of the federal funds rate. We also do economic research, and you'll see in a slide in a few minutes all of the areas that we study and why. Obviously, we do policy analysis, and public engagement is a big part of how we support monetary policy. And I'm very proud of the work that my team and I do. We are actually in public engagement. What I'm doing right now is a big part of public engagement as well. The next piece is we help to strengthen financial institutions, so think of banks. We are one of the regulators of banks. We supervise banks. We also manage what we call a discount window operations, and then we do bank applications, and we make sure that banks are taking on appropriate risks and making sure, again, on that price stability side, that the dollar that's in your wallet maintains its value. And then the last pillar is really enhancing the payment system. We do cash operations and distribution, as well as technology and innovation. And we'll talk a little bit about the cash operations and distribution. There are several of you on the call who's had an opportunity to come to the Los Angeles branch and actually tour our cash operations and distribution center. So monetary policy is a big part of what the central bank does, but I wanted to spend some time talking about all of the different things and ways and things that go into actually making monetary policy. So we'll start with the quantitative data and the economic analysis, which I know that the Fed is probably most known for. But the last three, the board and councils, the beige book, and the network, I would couch those as to say those are our qualitative data inputs. Our president, President Daley, says that data is plural. So there is quantitative data, but there's also qualitative. And so we actually leverage our boards and councils, our beige book, and the network of businesses and industries that we have access to. We leverage their inputs, and it is that input that really helps inform monetary policy. In other words, for the qualitative piece of the data, it really helps us understand how, again, businesses and industries are pivoting and adjusting in real time to monetary policy. And because the quantitative data, there is typically about a 30-day lag, the boards and councils, beige book, and our networks, we convene them and they're able to provide insights about what's happening today in their business, how they're adjusting today, and maybe even how they're thinking about their business in the short term, let's say 3 to 6 months. And those insights are really helpful to see a bit around the corner. And a lot of what we hear when we convene these three is that what they share with us, it might not show up in the data for months. Because again, some of the quantitative data lags. So with monetary policy, I thought this was also a really important slide to talk about just the pathway into policy inputs. So it starts with public engagement and economic research. Again, you've got quantitative and qualitative information about how businesses and community leaders, again, are providing their real-time feedback into current economic conditions and the future outlook, right? And then that goes into President Daley's outlook and understanding about what's happening here, specifically in the 12th district. And again, the Federal Open Market Committee, which President Daley is a part of that committee, they convene typically in Washington, D.C. And I will say that the other 11 Reserve Bank presidents, their regional executives, like myself, we're all doing this kind of work. We're being able to lift up stories and qualitative information from industries that are really driving the local and regional economy. And we're providing this information to our bank presidents to prepare them for the Federal Open Market Committee. And then the committee meets, and then they put policy into action. And then the cycle starts all over again. So how do we do this? How do we think about our boards and councils? How do we lift up these stories and anecdotal information about how industries are really pivoting and adjusting to current economic conditions? Well, one of the ways, of course, are our board of directors. And I wanted to just share that we do have a head office board that's in San Francisco, but we have 4 other local branch boards. I am responsible for the Los Angeles branch board, and then my colleagues that are in Portland, Seattle, and Salt Lake City are responsible for their boards as well. And for the local branch boards, we have a total of 7 members, and each of those members represents a different industry. But again, an industry that's really driving the local and regional economy. Excuse me. So I wanted to show the current composition of the Los Angeles branch board. We have our chair of the board, Carlos Gonzalez, who's head of Clark Construction. Excuse me one second. Who's head of Clark Construction. So construction obviously is a really big, important industry here in Southern California, but also in Arizona and Southern Nevada as well. And you can imagine the kind of information that he shares really is about the construction industry, whether it's on the commercial real estate side or even residential housing. So he talks a lot about the workforce, technology, and the demand, whether it's for housing or new buildings, such as data centers in Arizona and Nevada, as an example. We have Selena Cuff, who is the Chief Growth Officer for Blackstone Consulting. It's a very large consulting firm, and they focus on catering, facilities management, and logistics and security. So if you think about large buildings that may have security, private security, well, Blackstone Consulting is one of those companies. And they have very large contracts with Kaiser and other companies across the country. So she talks a lot about the workforce. She also talks about vacancy rates in commercial real estate and how those things impact the business. Remember, I mentioned I have Arizona and Nevada as well as California. So a big goal of mine is making sure that there is some geographic diversity and coverage within those states. And so Michael Jones is in Arizona, and he is president and CEO of Delta Dental. Healthcare is a really big industry for us as well to understand what's happening in that market, how they're leveraging and using technology, what's happening in the workforce as well. And then in Las Vegas, because I know we've got folks from the Vegas area here. Rosemary Vasiliadis is the director of aviation for not LAX, Harry Reid International Airport. And so you can imagine she talks a lot about travel, transportation, and tourism and things that are happening in Las Vegas, and how tariffs and those things may even impact the local economy. Next, we have Maria Hollingsworth, who is president and CEO of El Pollo Loco, a quick serve restaurant that's headquartered actually in Orange County, California. Quick serve restaurants, they build, they have large workforces, they think differently about technology. They're also a big workforce, as I said, and so she talks a lot about franchise versus corporate buildings, all of the challenges and opportunities in the workforce, especially coming out of the pandemic. She talks about local and state policies and how that also impacts businesses. And then lastly, because we, as the Federal Reserve, we also are regulators of banks, we traditionally have at least one banker on our branch boards, and we have Cheng Lu, who is the president and CEO of Cathay Bank, who talks a lot about the financial markets, how the federal funds rates, how the 10-year treasury, how all of those things impact the financial system, but also how it impacts his customers. So our advisory councils are another way in which we can convene business leaders from across our district to quickly understand and again, listen and learn about how these industries and communities have been impacted by current economic conditions. So for us in the 12th district, we have 3 advisory councils. We have our community advisory councils that are typically made up of nonprofit or organizations, particularly those in the housing sector, or the finance sector. We have our community depository institutions advisory councils. Think about banks and credit unions, and we convene them about 3 or 4 times a year. And then lastly, our economic advisory councils tend to be businesses from across the 12th district. We typically have a great representation from every state. within our district, whether it's hospitality, tourism, restaurants, quick serve, construction, real estate, agriculture. And so those councils meet very regularly with President Daley, and it allows her an opportunity, again, to hear directly from businesses about how they've been impacted by current economic conditions. As I mentioned before, in terms of our three pillars, we also, this is one of the ways that we support the American economy, is that we have cash distribution and operations in our facilities throughout the 12th district. And several of you have had a chance to come to the Los Angeles branch. But for us, we have 5 cash processing locations, one of which again supports the domestic currency volume for the entire Federal Reserve System. And so our clients, our major customers, are banks. So think about your bank, your financial institution. When your financial institution needs currency, they come to the Federal Reserve for that currency. So a big part of our operations is making sure that currency is flowing throughout our region. We also work very closely with the Department of Treasury and the Bureau of Printing and Engraving to communicate how much money we may take out of circulation. We may shred currency. We look for counterfeits, and we make sure that we take those things out of circulation, and then we let those 2 agencies know what the volume is so that they'll make sure that we still have the backfill and able to support the financial institutions in our district. And for us here in the 12th district, there are over 400 financial institutions. I'm very proud to say that here in the Los Angeles branch, we are the largest cash processing domestic operations in the country. I think primarily because we have places like Las Vegas to serve, but we're very, very proud of our cash operations here in Los Angeles. So I wanted to give you just a snapshot and a volume of what we process here in the 12th district. We process, or we ensure, or that we touch 72 million banknotes every day in our district. And it could be any denomination, but 72 million a day, per day. I mentioned that here in the San Francisco Federal Reserve, we also study big topics and trends that may have an impact on our dual mandate. Again, the dual mandate is price stability and maximum employment. So I wanted to just show and highlight just a couple of things that we've studied. At the end of this presentation, I will have a QR code. And if you are interested in subscribing to our network and receiving our economic letters, I'll make sure that I'll leave that slide up for a while. But here are just some of the topics that we've studied over the last several years. I talked a lot about listening and learning as a big part of my job as a regional executive here. And I just wanted to share with you all just a couple of social media posts that we've done through LinkedIn or our actual state pages that may highlight a specific visit that we've taken or a trip to an interesting, part of our region and learn specifically about a particular industry. So in the middle, we've got around the district, the video game industry here in Los Angeles. I had an opportunity to take a few of our senior executives from San Francisco to Riot Games, which is located in LA. And we spent a couple hours there just learning more about the gaming industry, the challenges and opportunities that they face, and a little bit more about technology and how they're using things like generative AI in their industry. I've got a big region that I cover as well. I mentioned, really half the state of California, Southern Nevada, and Arizona. There are about 35 million people who live, work, and play in my region. And about a year or so ago, I had an opportunity to spend some time in Kern County, Bakersfield in particular, and I convened a group of business leaders there from all sorts of industries from Central Valley, again, to listen and to learn about how, how they're making decisions based on their business with the economy that we had at that time. So I wanted to make sure you all had a chance to see this slide. So that concludes my presentation. As I said, I wanted to probably keep the slide up a little bit. If you have your cell phones with you, you can certainly take a picture of either of the two QR codes. There's our LinkedIn page where you can follow us there. We also have our San Francisco Fed newsletters or economic letters and subscriptions. And you can sign up there as well. And of course, my contact information is there too. So with that, see.
Well,
I'm
I'll
gonna
put it
stop
back in
sharing.
gallery view instead of speaker view. Okay. there we go.
Okay, I'll stop sharing.
There we go. Everybody's back on.
Okay.
So thank you, Qiana. As always, it's very insightful and it was very good timing as well for the information. As also for everything that's going on and people are very clued into their investments and so forth. So we've enjoyed the relationship with Qiana. We've gotten to go and see the Federal Reserve and see how they handle the money and so forth, and also to share ideas with business leaders and what's important to them. So, Qiana, is there a question or some feedback you'd like to receive from this group? We could go around the room and ask if there's a particular item you're interested in.
Yes, yes. So I had an opportunity to see this amazing list of leaders, from different industries. I want to just ask I'll just throw out the question and anyone can answer this. One of the questions that we started to ask businesses, I would say in the last month and a half, have really been around tariffs. And I'm sure you all can imagine why, right? Tariffs has been in the news a lot. Different industries may be impacted by tariffs, which then can impact consumer demand, which then goes into monetary policy. So the question is, as you all think about your individual businesses, how has tariffs, the threat of tariffs, the actual tariffs themselves, how have they impacted your business or your industry?
Okay, I can start. I'll start and then I'll just go around. I
go.
already told you. So
Oh.
I work at Boeing as a senior IT business partner, and I was just perusing the news channels this morning as I do. I look at all of them because they all have a different spin.
Mhm.
And it was announced that China is stopping payment on any Boeing commercial airline deliveries. And if a company in China wants to accept a Boeing plane, they have to get approval from Z. So obviously that will impact Boeing in the bottom line, not in a good way. I said, can't Boeing get a break? But anyway, so that's my story. So Linda, what about you?
Yes, I'm formerly senior director at Universal Studios Hollywood, and I was in a global role. So from Universal perspective, we have a park in Beijing that we just opened. There's direct impact there because it's being operated by Universal, but the Chinese government owns the park. So they can dictate where the revenue goes. The second thing is for the Park Hollywood. We were anticipating a certain amount of international tourists. Now, if they're not coming, that will directly impact Hollywood. Then going to the other coast, to Orlando, again, I hope everybody's seen the ads for Epic Universe. The budgets for that have been, locked in for a while, and they're anticipating a large number of international tourists from Canada, from the UK, from EU countries and other countries. Well, they've decided they're going to cancel their reservations and not come, and they'll come when they feel like it. So from the tariff perspective, it has, impacted tourism at a significant level. And then the fourth thing that happened is there is Universal's opening up a new attraction in Las Vegas called, called Halloween Horror Unleashed. Again, Vegas is a big market for our Asian visitors. Well, guess what? They're not coming either. So, like I said, from all 4 parks globally, there has been a significant, reduction in the amount of international guests that we're anticipating, and also from Mexico and the Latin America countries. So that's how the tariffs have impact Universal from the park perspective. Then let me just flip over to the film side. Universal or NBC Universal, their film division has been notified that the films for the United States, producers will not be shown in certain markets, will not be shown in China and in the other markets. So again, that impacts the bottom line for the film industry as well as the tourism industry.
That's very good. That's
Yeah.
a really good graphic description.
Mhm.
Okay. Rochelle and Mimi, we'll just kind of go around the room.
And Linda, as I wrote in the comments, thank you for sharing that, because what a multiplier through the industry through the whole economy that is.
Mhm.
Right. So,
Yeah.
again, when you get to like Comcast, which owns NBC Universal, which owns Universal Studios Hollywood, there's not an area of that company that has not been directly or indirectly impacted by the tariffs.
Mm.
Thank you, Linda. I'm Rochelle
thank you.
Nidkheim with C-Suite Search. We are an executive search firm and retained executive search. And for us, tariffs really affect companies in the sense that because the prices of increases for what they're manufacturing and or the cost of them doing business, oftentimes they'll pull back on hiring certain positions,
Mhm.
or the increased cost, will have them delay executive hires until they know, a little more certainty around those types of hires. So I haven't seen it immediately, but I anticipate that we'll see some of that pullback this year.
Mhm. Mhm. That's really helpful. And see, that's why conversations like this is so important, because we may not see that pullback that you mentioned, Rochelle, in the data for months.
Mm-hmm.
But the fact that you're anticipating it gives us something to look forward to, something that we can expect to happen, to see in the data. So I really appreciate that.
Yeah, thank you.
Mimi, then Joy.
Hi, Qiana, wonderful presentation. I
Thank
just
you.
was just soaking up. I did not know this kind of teamwork that you all do and feeding your own industries.
Mhm.
I'm a sole proprietor now after being in HR, but I'm a speaker coach. And I work
Mhm.
with lots of people who are in big companies and they're affected. And the thing I'm hearing now is a lot of anxiety. I follow the Wall Street Journal, and there's just the uncertainty of, is it 90 days? Is it pulled back? Is it going to be? It's like, that's what's driving people crazy individually. And I'm also looking out for my SEP-IRA, which, is probably going up and down. I don't look right now, but
Mhm.
I mean, they want to know certainty, and the markets want to know certainty, and there is no certainty. It's all very up in the air and kind of plates spinning at once, and it's not secure, and people are not wanting to spend money is what I'm seeing. And it's just,
Mhm.
and it's the chaos and the uncertainty that's the problem.
Yeah. I would say, the word uncertainty is probably the number one word that businesses have used to kind of describe this, this current condition that we're in.
Mhm.
And, really highlighting the difficulty in planning ahead when, things are so uncertain. So I certainly understand what you're saying there. And we are starting to hear that from a consumer perspective, people are pulling back. They may not be shopping as much. They might not be eating out as much, as an example. And so this is really helpful for us. But yeah, that word uncertainty has come up in every single outreach call that I've had. Every single one of them, every leader, every industry has talked about the level of uncertainty and the difficulty in planning ahead.
Mhm.
So after Joy, if anybody else would like to pipe in, they can. I'm not going
Okay.
to make everybody have to say something. So, okay.
Thank you, Beth.
Well,
Keep me on track, Beth.
I was going to say, I'll circle back to theme parks for a minute. I talked about what was going on internationally, but locally, especially with Epic Universe, a lot of people are canceling or pulling back because they don't know how much things are going to go up. They're saying, well, let me hold on to this, $1,500 I was going to spend for theme park tickets to, see what's going to happen. Or they may fear that, depending on what industry they're in, they may say, well, let me hold on to this till I see how my job situation is going to play out. Because a lot of people are just a little bit, leery about spending, chunks of money on something that is not a necessity. So going to a theme park, as much as most of us enjoy roller coasters and things like that, it's not a necessity when you look into your family budget.
Mm-hmm. I see Mercedes' hands up. I just have one follow-up for Linda. As you think about tourism, hospitality, theme parks, you typically see a lot of demand, I would think, in the spring and summer. What are your expectations, I would say, for the end of this summer? Are you expecting, this still level of uncertainty, or do you expect, by the fall that ridership, that folks will continue to support the theme parks, as an example?
Right now, from what I'm hearing, everything is up in the air.
Okay.
Because we've seen the major drawback, people canceling, or people pushing out till next year. Because in some instances,
So they're
when you buy
pushing out a year.
Yeah,
They're pushing out a
'cause-
year. Okay.
Yeah, because in some instances, when you purchase a ticket, you may not be able to cancel it, but you may be
Okay.
able to reschedule it.
Okay.
Just because, depending on which park you're going to, you may need hotel and
Right.
the food in the park is not cheap. So you're looking at, let me defer that until I get some clarity for the summer. And then there's the summer period. Then there's also what they have, the HHN, the Halloween Horror Nights period, which is what you
Okay.
have from September to November. And then from November through the first of the year, you have Grinchmas, or you have the Christmas things that happen. So people are, like I said, pulling back, deferring, or outright canceling. So from the international perspective, we're seeing outright canceling. And the parks are dependent upon that international market, because we know that if you are an international tourist, you will spend more money.
Yeah, no, that makes sense.
Yeah.
Joy, I know before Mercedes, I had offered you an opportunity. So did you want to add anything?
Yes, I would love to. So Rochelle, I wanted to piggyback off of what you were saying. I'm also in the staffing industry, and I'm literally just coming off of a staffing conference last week, and actually writing an article specifically to tariffs. So some of the 7 things, that I had sort of jotted down in terms of key points that I wanted to convey in my article is around, number 1, what we were saying, economic uncertainty and business slowdowns, right? So because of this uncertainty, there's been a reduced demand for staffing services. Projects are being delayed. There's shifts in workforce needs. So domestic hiring, nearshore, offshore, all of this is impacted, because of these tariffs and forcing us to look at specialized skill needs. So that's a whole other area. Cost pressures, contract adjustments. So suppliers are having to reduce their margins just to, do business with people because there's cost, cutting measures, happening within their clients. There's some sector specific impacts, especially related to manufacturing and logistics because of, the tariffs as well as technology. Of course, as I mentioned earlier with the nearshore and offshore, there's a specific component, just as, we were just talking with the global workforce mobility, changes in cross-border hiring with, obviously with everything that we've been talking about as well. And then an opportunity for growth and compliance roles, right? Because with all of this, policies and things changing, you're going to have to put things in place, relative to the new changes. And then economic ripple effects. I mean, ultimately, everyone is fearing, a recession. And so everyone, as we're talking here, is, holding on to their money. I've been open to work for the longest I've ever, been, as a result of being laid off due to the recession or due to the economic slowdown. So as a result, I'm consulting on skills that I have repolished and also consulting on the staffing industry as well. So if I could just add, in that way.
That's really great. Joy, I have a follow-up question for you. I was typing, trying to capture everything here, but you touched on looking at specialized skill needs. What does that mean?
So, as you are looking at businesses, like they might require specialized workers to navigate these tariff-related challenges because not everybody really understands them. Supply chain analysts, trade compliance experts, procurement specialists, these are some of these specialized skills that might be needed.
Very helpful. Thank you.
You're welcome.
Okay, Mercedes.
All right, thank you. So not to go into a darker hole, but I work in healthcare and medical device, which used to be exempt from these type of changes, but now pharmaceuticals might be included as well. And that's very, very scary because with healthcare, as you know, it's not an option not to take a vacation or there's no slowdown, and healthcare is already so expensive. So it's a pretty scary place to be. I worked at a German dental company and they don't know what's happening. Do they need to adjust our cost, our exchange rate? And again, back to the uncertainty, it may happen, it may not happen. So it's not a great place for anybody in any industry, but the fact that it could impact healthcare, it's even worse.
Thank you. Thank you. Beth, do I have time for one?
Yep, you have
one
time
other
for
question?
Julie. She's got her hand up.
Okay.
Julie, did you have a
Julie?
question?
No, I don't have my hand up, sorry.
Okay, looked like your little hand was up.
Okay.
Okay, Qiana, go ahead. One more
Okay,
question.
one more lightning round question. Let's say the next question is related to generative AI. As I mentioned before, the Fed, we study many topics and trends that might have an impact on our dual mandate, the price stability side or the maximum employment. And of course, we keep hearing that Gen AI has the power to be as transformational as our cell phones. So the question is, are you all using Gen AI in your business today? And if so, in what ways?
Anybody can pipe in.
Hi, this is Carolyn. I can chime in on that one. Hi, Qiana.
Carolyn?
Yeah, so at a local utility, we're using it a lot. We were one of the first ones that had an opportunity to pilot the Microsoft version called Copilot in the call center, as well as just giving a certain number of employees a license to just play around with it with their day-to-day roles to see how it could improve just overall production. So anything from being able to just help create or draft email responses to creating presentations by just having limited information, ideas or thoughts and create a full presentation to writing reports. It's also used from the regulatory perspective of giving an overview of maybe a decision. So things like that, taking reports that may take, like multi-page, 50, 60, 100-page documents, even in the legal department, and being able to just say, give me an overview with the high level points, within 2 pages summaries have been very, very helpful. And so now it will be distributed across the organization. And it has been very helpful. Now we're also able to include it into different IT chat bots for employees, as well as for the customer experience when they call in. They may get an AI experience. And then I'll just share one personal experience outside of the day job. I just drove through a fast food to just order something. I was at Popeyes, and the prompt came up, may I take your order? And as I continued to engage and go through the whole process, I didn't realize that I wasn't talking to a real person until the
Wow.
very end. There was one thing that was said on the upsell of, do you want a pie or this or that? That made me think, like, but there was the inflection in the voice and all of those things. It was very hard to tell until the very end. And so I confirmed at the window, and she said, yeah, was there an issue? And I was like, no, she was right on with the order and everything. But that made me think, from that perspective. And I've seen some of the other fast food industries now, when you go in, the kiosks are there, like McDonald's, you place it, and you only having someone that's coming to put the food on the counters. So thank you.
That's
You're
really
welcome.
great.
Okay,
Yeah,
we have time
I've
for
heard a lot
one
about the
more.
drive.
Hi, Helen, welcome.
Mm,
Go
sorry.
ahead, Qiana, sorry.
I was gonna say, yes, Carolyn, I've heard a lot about the AI and the drive-through from different restaurants, that I've talked to. And many of them say customers actually like it. They prefer that. And these bots are able to upsell in a way that workers are not able to do. So yeah, I could see that. See that happening. Okay. I'm sorry, Beth, didn't mean to cut you off there.
No, that's okay. I think Linda was gonna chat or had a
Oh,
comment.
From the technical perspective, we're able to get websites and other system changes done quicker because we're able to automate, do testing automation and development quicker. Because one of the things that was happening, like I say, Universal, we used to bring in interns and used to bring in like entry-level talent to do a lot of the manual coding and things like that. No,
Mhm.
we were referring that to using various AI tools to do the development. And then also from the quality engineering perspective, be able to have automated testing, where before we used to be able to have to do it manually. So the time to market for certain tools, that we've been able to get like dynamic pricing and like point of sale and various things done quicker, because on the back end, the development was automated as well as the quality engineering. So sometimes what used to take weeks, now you could do it in days or less.
Wow. Okay. Good. That's really good.
And Helen, I
I see
don't know
my-
in your world.
I was
Qiana
gonna
was
just say that. I was
asking,
gonna say, I see my friend Helen.
yeah, how have you, or how's the university, have they integrated AI into any of their workflow or tasks or operations?
Yeah, thanks. I'm sorry for missing, and I'm so glad you recorded it. I really wanted to see Kiana's presentation, but I'm glad to weigh in at the end. I think universities have taken we're a lot like businesses in some way, right? So we're looking at what we can do on the administrative side. But I think what's more interesting is how can we prepare students to go out and use AI in be ready for working in this world. And it's been very hard for us. And I'd note because it's moved so fast and students have different access. So there are a couple of interesting things going on. The Cal State system has a very large arrangement now, recently signed an arrangement with OpenAI to provide access to AI tools to all, almost 500,000 students in the Cal State system, which I think is amazing because many of those students, I think, couldn't afford perhaps to buy a subscription to ChatGPT or whatever. But so I think those are the kinds of ways that we'll see a difference, turning out students who are ready to work in that AI-enabled workforce. And I feel like we have a way to go. Even in the Cal State system, this is a very new deal, and now they have to figure out how to roll it out on all 23 campuses. It's really an interesting thing to see. But I think the future jobs will require people who know, who are either going to be able to help us develop better AI tools or know how to use AI in a good way. And it's interesting that a lot of these AI jobs are currently kind of offshored, but I think we need to have a specific intentional effort to make sure that they come back to California, right? That we educate our students in a way that they're the people that that NVIDIA wants to bring on board or OpenAI wants to bring on board. So I think it's very important to figure out how to use it in teaching.
No, that's very valid. Yeah.
Mhm.
Okay. All right. Well, we want to thank you all for attending today. It was a great session for our leadership edge and executive edge. And thank you, Qiana, for coming with us today. As always, a delight
Very
and a
welcome.
pleasure.
Always welcome. Always welcome.
Thank you. It was really
Have a
good.
fabulous Easter and Passover and holiday week. Thank you very much.
Thank you so
Thank you,
much.
Qiana.
Thank you.
Thank you.
Yeah. Hello, hello, hello. Hello, you can go back on video. No, this is the same thing.